Welcome to today's Explainer. We're diving headfirst into the massive and, let's be honest, completely chaotic world of AI cryptocurrency. The crossover between artificial intelligence and the blockchain is moving at absolute breakneck speed right now. It's creating a landscape packed with unbelievable, world-shifting innovation, but also some seriously dangerous speculation. So today, we're going to separate the signal from the noise.
Which brings us to the ultimate question that literally every investor is asking. Is this explosive AI crypto boom a genuine technological revolution that'll fundamentally rewire the internet? Or are we just staring at a highly engineered speculative trap? To figure this out, we're going to zoom out to look at the macro landscape and then zoom all the way in on a highly volatile microcap case study.
Here is our roadmap for today. We'll cover the AI crypto landscape, BitTensor's market dominance, a hype machine called SkyAI, red flags and market makers, and finally, the golden rules for crypto trading.
All right, Section 1, the AI crypto landscape.
So right now we've got dozens of tokens out there, but they basically fall into three distinct buckets across the AI value chain. Up at the top, you've got compute models, think Jensen, which are essentially marketplaces just routing GPU power. Then, in the middle, you have inference networks that dish out on-demand AI outputs for a fee. But the real heavy lifting? That happens at the bottom with training and validation networks, like BitTensor. These protocols build massive, complex incentive structures to actually make AI models smarter over time. And it's exactly that sheer protocol complexity that creates a huge moat against new competitors.
Moving on to Section 2, BitTensor's market dominance.
$2.4 billion. Yep, that is the market cap of BitTensor, ticker symbol TAO. That makes it the undisputed heavyweight champion in the decentralized AI sector. I mean, we're talking nearly $200 million in 24-hour trading volume. It's maintaining this massive, undeniable gap between itself and any of the newer, smaller rivals trying to muscle into the space. The really crucial takeaway here is the stark contrast in foundations. Look at TAO. It's got a self-sustaining subnet architecture that's been built and battle-tested over 3 long years. Deep complexity, real developer activity, the whole shebang. On the flip side, you've got rivals like Jensen relying on unproven launch day hype with a much simpler compute model. Look, a launch day token just cannot replicate a 3-year-old, deeply entrenched community overnight. That makes their early-stage price action incredibly speculative.
Let's get into Section 3, SkyAI, the hype machine.
Now, this micro case study is fascinating because it perfectly captures the absolute frenzy of the current market. To understand the hype, you just need to glance at social channels like Binance Square. We're seeing posts screaming, "Stop, stop, stop, don't scroll past this. You're about to miss the most underrated AI coin of 2026. Over 10 billion rows of data already aggregated." They are aggressively pushing this first-mover narrative about a revolutionary data economy, and it is explicitly designed to trigger intense fear of missing out in retail traders.
And guess what? That aggressive marketing totally works. This manufactured hype sparked a massive 176% spike in 24-hour volume. We're talking almost $110 million, pumping the price up over 33% in a single day. But actually, here's the catch. That volume was completely detached from the broader market's downward trend. That is a massive flashing warning sign. It points to a sharp influx of purely speculative capital, not genuine foundational growth.
When we put that ambitious roadmap right up against the technical reality, well, the structural cracks really start to show. The entire bull case here hinges on a model context protocol marketplace that hasn't even launched yet. Meanwhile, the reality? The token's relative strength index, the RSI, which is a key momentum indicator, is sitting heavily in the danger zone at over 74. Just for context, anything over 70 is highly overbought. So this surge is driven entirely by momentum, zero solid fundamental news catalysts, leaving the token extremely vulnerable to a rapid crash.
Which brings us to Section 4, red flags and market makers. When analysts dug into the underlying on-chain data for this one, they spotted smart money using a terrifying tactic called matrix distribution. Basically, instead of holding all their tokens in one giant wallet, market makers split massive holdings into dozens of tiny, seemingly disconnected sub-wallets. This completely obscures their selling pressure. It lets them artificially manipulate liquidity right under the noses of average retail traders. Wild, right?
Exactly 73.
That is the number of coordinated, clustered wallets that have been quietly, methodically scooping up SkyAI for over a year. They built these positions across decentralized exchanges at roughly 4 cents a token. Long before any of that social media hype machine ever spun up.
Fast forward to today, and those 73 wallets control almost $70 million worth of the token. They are sitting on a staggering 476% profit, just waiting for the right moment. They aren't dumping just yet, but this intense centralized control guarantees that when they finally do decide to take profits, the price is going to collapse. And anyone who bought in during the hype phase, well, they become the exit liquidity. They're trapped.
All right, finally, Section 5, Golden Rules for Crypto Trading.
Buying the bottom during the decline is like catching a flying knife with bare hands. I absolutely love this imagery straight from Binance because it just perfectly captures the danger of letting your emotions dictate your trades. When a hype token starts tanking, your gut instinct might be to buy the dip, right? But without a confirmed trend reversal, you are literally just reaching for a sharp blade.
To protect your capital in this wild environment, you've got to build an ironclad shield of discipline. Treat this like a real operation, not a spin at the casino. Strictly enforce your rules. Don't cover losing positions just to make yourself feel better. And absolutely do not subsidize losses with your living expenses. Stop overtrading. Never chase a pump just because you're scared of missing out. Math says missing out is always better than losing your principal. And most importantly, ignore the megaphone of social media gossip and those fake insider research reports. If a hot tip magically reached your feed, it's highly likely you're the target they need to unload their bags onto.
As you navigate this explosive AI crypto market, keep your emotions in check and respect the undeniable on-chain data. Because before you get caught up in the next massive surge, you really have to ask yourself this: are you genuinely early to a new technological revolution, or are you just stepping in to act as someone else's exit liquidity? Thanks for exploring the data with me today. Stay disciplined, protect your capital, and I'll catch you in the next explainer.